Hello and welcome to webinar 2, Why Invest in MarketsFlow's UK Stock and Shares ISA. Today is March 8th, 2019. I am Tom Nash, founder and CEO of MarketsFlow. I'm also joined by Adam Tyrrell, our portfolio manager, and Marie Platis on marketing and client relations side. The content we're going to cover today are about ISA and junior ISA basics, the fee structure, further features of an ISA, a medium-term example, and fees. Why is MarketsFlow's offer unique and our proprietary platforms best in class? MarketsFlow is an investment advisor and manager. We're authorized by the FCA, and we're also authorized by the HMRC as an ISA manager and junior stocks and shares ISA manager. We're also regulated by the SEC. As a risk disclosure, any financial performance figures refer to the past, and that past performance is not a reliable indicator of or forms a guarantee for future results. So what is MarketsFlow? We're a multi-award winning and highly sophisticated platform for managing investments. Our proprietary platform helps us deliver optimal portfolios with high returns and low volatility for our clients. The products we offer are managed portfolios, where we manage the portfolios on behalf of our clients as discretionary portfolios, ISA and junior stocks and shares ISAs, IRA accounts for domestic US clients, which is investment retirement accounts, and self-managed portfolios. Our custodian and broker partners are Interactive Brokers and Charles Schwab. With that, I'll hand over to Marie to cover the basics.
Hello, everyone, and thank you for joining our second webinar. I am Marie from Marketing and Clients Relations, and today I will be taking you through the basics of the ISA and Junior ISA and giving you an insight into our extremely competitive ISA management fees. So to start off, for the Stocks and Shares ISA, the total allowance for this tax year for 2018-19 is £20,000. You can invest from £5,000 and top up from £100 at any time. For the Junior Stocks and Shares ISA, the total allowance for the year 2018-19 is £4,260, and you can start investing from £1,000 and top up from £100 at any time. To make full use of your allowance, you would have to invest the full amount for each of the above by the 5th April of 2019. Otherwise, it will move over to the next year. Moving on to the fees, as you can see, our fees are extremely competitive for the industry. They are 0.5% annually, and they're charged on a monthly basis in arrears. In order to see our complete schedule for the ISA management fees, it's also on the website, so you can have a look there. The main thing, though, what sets our MarketsFlow ISA apart is the way that we manage it. So we manage our client's portfolio rather than investing in a third-party, uncontrollable product. And in this way, we can continuously optimize your ISA portfolio for the best returns. And over to you, Tom.
So, Tom, I guess it's time you allow me to move into the additional features of ISAs, which cover the next few slides. This is Adam Tyrrell, and I'm just going to talk about a few additional features of ISAs in general, and some of the implications. It may be very well known that some of the flexibilities within ISAs have increased in recent years, including the facility to withdraw and replace cash within each tax year without affecting the amount of allowance that the tax break covers. There is also full transferability between the different types of ISA: cash ISA, investment ISA, innovative finance ISA, in any direction, which is obviously of use potentially as market circumstances change, but also more long term as people move into different age groups and they want perhaps different risk levels in their investment. It's a great facility to be able to take all this accumulated investment capital and potentially move it into any of the different flavors of ISA. And also, quite importantly, although pension freedoms went up a couple of years ago in terms of what you can do with pension assets after a certain age in terms of getting them out. Generally, however, pension freedoms in other respects have been tightening. They've been getting more restrictive, such as in the sense of how much you can invest before there are onerous tax implications about doing so. But we've always seen pension savings as being a little different from ISA savings, but complementary in the sense that although they each have a tax advantage element, it's quite a different type of tax advantage. With the ISA, the investment goes in, already having been taxed. It's from your net, and then when it's taken out, it is untaxed. Pension savings, on the other hand, go in gross, subject to some of those tax restrictions I mentioned, but are taxable when taken out. So they really do have a slightly different dynamic, as well as the time at which they can be accessed. ISA assets, of course, can be accessed at any time if needed. Pension savings are kept away in storage until old age. And over the long run, it makes sense, of course, to use tax shelters in general, but there's a little example that's going to follow which shows how the use of tax shelters in a particular way, given that an investor is likely to have a diversity of spread of different investments, and how some of them may go into a tax wrapper and some of them may not. And that choice can actually have quite significant implications. So moving on to the next slide, a medium-term example. We're just taking an assumption of a 10-year period here and saying that, let's say that the ISA allowance remains £20,000 per year. In reality, it will probably go up, but for simplicity, we're going to keep this constant. A reasonably affluent individual here is the case study who's able to save £40,000 per year. Obviously, that's far too much to be accommodated into their own ISA allowance per year. So some of it can go into the ISA tax wrapper, some of it can't. So let's say this individual directs half of that amount to use their 20,000 ISA allowance, and the other half must remain outside the tax wrapper. And in addition to that, this individual wants to have two types of investment, a very conservative cash-based investment, no risk really, pretty low return, and the other half they're going to direct into high-performing funds, more aggressive, but over the long term likely to be very, very probable to deliver a much higher return than cash. The individual's tax rates in this example they're not the highest of tax rate payers, but they're in that medium category with the 40% rate on income and 20% on capital gains. And there's one other assumption which should have been noted here, although it is noted here. We're saying that the cash products return 2%, the high-performing funds return 12%, and out of that 12%, 3/5 comes as capital gain, 3/5 comes as income. So that would give you the tax implications in the event that was held outside of a tax wrapper. So how should such an individual use their ISA allowance? Well, we run two examples just to see how different the numbers might be. Example one, the investor shelters the cash product in an ISA wrapper, but not the high return funds. And example two, which we're going to argue is the sensible approach, the investor shelters the high return funds in the ISA and leaves the cash outside of it. And note that these two different choices about where to put these investments do not have any implication about the amount of investment risk being taken. The amount of investment risk is the same, it's just the way that it's packaged, the way that the tax wrapper is used. So on the next slide, we see the way that the portfolio value evolves over time in those two examples. In the example in which the individual puts the high return product into the tax wrapper, those advantages of compounding of return combined with the tax saving, which again is part of that compounding, that really builds up over time. And you could see that gap there is about £60,000 over the 10-year period. But where it looks even more stark as a contrast is on the subsequent slide, where we're simply looking at the amount by which the investments have gone up. Cumulative net investment return, it's really quite a stark contrast there. Now that difference by the end of year 10 is a difference of almost £60,000. That's equivalent to 1.5 years contributions to saving. So the way that you deploy that ISA tax wrapper really can have some significant implications in the long run, in terms of the way that the returns can look. So,
yep.
Tom, I pass back to you.
Okay, thank you, Adam. So, what is unique about MarketsFlow's ISA offering? At MarketsFlow, we're offering a unique proprietary investment platform which we use to actively manage the stock and shares ISAs your portfolio is invested in. Our active ISA management portfolio ensures that your investment is actively monitored and adjusted daily to yield the best possible results. I'll show that in the next slide, how these actions are taken. What we do not do is invest your money into a third-party uncontrollable ETF where we have no control. So as you can see in the next example, we buy when the platform generates buy signals. So here we've got the month of Jan 2019. There are a fair few buy signals in terms of the signal strength. We are allocating the positions to the portfolio. And then in the next example, you can see when there's compression in the market or there was high volatility or sell-off in the market, and the markets are in a downward momentum, we would be selling out, as you can clearly see in the month of December. Now, in terms of the proprietary platforms, what are you getting? With MarketsFlow, you are getting ISA exposure to our growth portfolio and our high growth portfolio. You're not getting exposure to the options, but you're getting to the underlying universe and the active portfolio management side of things in terms of buying and selling. In terms of the interactive brokers, you're getting exposure to UK and US stocks. So primarily growth portfolio and high growth portfolio are US stock based, which is important. And I must stress, not every ISA portfolio allows you to be able to invest in US stocks. Now, why are US stocks important? For us, the trading costs are from $1, which is fairly minimal compared to some of the other providers who charge up to £10. There is some exposure to foreign exchange, as there always would be, but nevertheless, the underlying cash is held in GBP sterlings. By trading on these portfolios, you don't get exposure, or there are no stamp duty charges. So in this slide, here's some information how to reach us for both our UK and US addresses and our phone numbers. You can also check out more on ISAs with our new page, which you can see on the UK website by logging in and under the product section, ISA. I just want to stress on a few things before we answer some questions. Firstly, you can start to invest with ISAs from £5,000 for the stock and shares ISA. For junior ISAs, you can start from £1,000. You can top up from £100, and you can do that on a monthly basis, or you could top up as you like. With that said, we have a question on options. So we did cover that as per the HMRC rules, we cannot trade in options on ISA stock and shares portfolio. However, as part of our managed portfolios, we do use a fair bit of options, and that does provide us additional yield and additional P&L. So our next question is whether we plan to have GB-based portfolios. So perhaps Adam, you could cover that.
Sure, yes. Well, although they're not available right now as of today, there certainly are plans in the pipeline to have GBP and I think also Euro-based portfolios brought online, certainly within the next year. And that would mean still coming available for the 19 to 20 tax year.
Great. Thanks, Adam. Right. So do we plan to lower down our entry limits? A very interesting question, and I think you may have seen our latest update in terms of lowering down our entry barriers. So I think we should be providing an update in terms of, hopefully by the next coming year, we should be able to bring down our entry costs for ISA stocks to a significantly lower entry, and hopefully by that we should be able to offer our offering to a wider audience. So that should be in play by the end of, in fact, very soon. We have filed our application with the FCA for lower costs, and then that should be, we should hear some results soon. Thank you very much for dialing in. And if you've got any further questions, you can either send us an email at support@marketsflow.com. You can also log into the website, and you can read up more on our ISA offering. Please bear in mind, you've got up until April 5th of next month to open your ISA accounts for this year. Thank you, and have a wonderful weekend. Bye-bye.